Welcome to Explain the Charts. Today is March 24th, 2026, and we are taking a deep look at Microsoft, ticker Microsoft. The stock has seen a rough session today, closing down about 2.73% at $372.74 as the market reacts to several negative catalysts. A major headline today is that OpenAI has flagged its dependence on Microsoft as a key business risk in a document resembling an IPO prospectus. This news, combined with rising fears over high capital expenditures for AI infrastructure, has shaken investor confidence. Microsoft is also navigating a legal dispute over a $50 billion OpenAI-Amazon cloud agreement, which adds a layer of regulatory uncertainty. Despite this, Bank of America has reinstated coverage with a buy rating and a $500 price target, citing long-term growth in Azure. Azure revenue growth remains robust at 39%, yet the market is currently focusing on ROI compression and margin pressure. We are also seeing broader market weakness, with the tech sector slumping due to declines in other giants like Salesforce and IBM. Technically, the stock is hitting new lows for the year, and many analysts are calling this the worst start for Microsoft since 2008. On the daily chart, we can see a clear downtrend that began after the stock peaked near $555 in mid-2025. Since then, Microsoft has been making lower highs and lower lows, indicating a sustained bearish regime. The stock is currently trading well below its 50-day and 200-day simple moving averages, which often act as dynamic resistance. Today's close at $372.74 brings us dangerously close to a critical psychological support level at $370. If this level fails to hold, the next major support zone isn't until the $345 range, which was the 52-week low. Let's look closer at the recent price action to see if there are any signs of a reversal. Zooming into the daily chart specifically for the year 2026, the bearish momentum is quite evident. We saw a failed attempt to reclaim the $480 level in early January, followed by a sharp rejection. Since February, the selling pressure has accelerated, with the stock losing nearly 20% of its value year-to-date. The volume on red days has been consistently higher than on green days, suggesting institutional distribution. The Relative Strength Index, or RSI, is currently near 35, which is approaching oversold territory, but not quite there yet. In a strong downtrend, oversold conditions can persist for a long time before a meaningful bounce occurs. We are looking for a high-volume capitulation candle or a bullish engulfing pattern to signal a potential bottom. The $380 level, which previously acted as support, has now clearly flipped into a resistance zone. This $380 flip is a classic technical sign that the bears are maintaining their grip on the narrative. If we can't get back above $380 soon, the path of least resistance remains to the downside. However, the $625 billion AI backlog mentioned by analysts provides a fundamental reason for long-term bulls to remain interested. The tension between these strong fundamentals and the weak technicals is what's creating this volatility. Investors are questioning when the massive AI investments will start showing a higher return on investment. For now, the chart suggests that the market is de-risking in anticipation of higher spending in the coming quarters. Let's drop down to the hourly time frame to see how the breakdown unfolded over the last few weeks. On the 1-hour chart, the breakdown from the $410 level in early March was a turning point for the short-term trend. You can see a series of bearish flags that resolved to the downside, leading us to our current levels. Every time the price touched the 1-hour 50-period moving average, it was met with a fresh wave of selling. This indicates that day traders and algorithms are using relief rallies to add to their short positions. The $395 level acted as a temporary floor mid-month, but that was decisively broken on March 18th. Today's session saw a continuation of this hourly downtrend with very little intraday buying support. The MCD on this time frame is currently flat, showing a lack of momentum in either direction at these lows. We need to see a break of the downward trend line connecting the highs of March 10th and March 20th. A breakout above $385 would be the first sign that the short-term selling is exhausting itself. Until $385 is reclaimed on high volume, we must assume that every bounce is a dead cat bounce. The news regarding OpenAI's risk disclosure seems to have hit the tape right as we were testing the $380 support. This fundamental trigger provided the energy needed for the bears to push the price to $372. Note the high transaction count during the midday slide, which shows active participation in the drop. It is important to watch if we see any wicking at the bottom of these hourly candles near $370. Let's move to the 15-minute chart to analyze today's specific intraday movement. The 15-minute chart gives us a granular view of how Microsoft behaved over the last 48 hours. Following a quiet session on March 23rd, the stock gapped down at the open today. The price action remained heavy throughout the morning session, failing to fill the opening gap. When the news about the OpenAI-Amazon legal dispute hit the wires, the selling intensified further. We saw a steady bleed lower with very few green 15-minute candles to provide relief. The VWP, or volume weighted average price, has acted as a ceiling for the entire session. Currently, Microsoft is trading well below its daily VWP, which confirms the bearish intraday sentiment. There is a small cluster of support visible at $371.85, which was the low of the day. If the stock opens below this level tomorrow, we could see a fast move toward $365. The 15-minute RSI reached extreme oversold levels near 20 today before a very slight recovery. This minor bounce into the close lacked volume, which doesn't bode well for a gap up tomorrow. Short-term traders should look for a break above the 15-minute 20-period EMA for a scalp-long opportunity. However, the overarching trend is so strong that fighting the trend is high risk at this moment. Resistance levels for tomorrow are at $375 and $379 on this micro time frame. Let's head back to the daily view to recap the key levels and provide my outlook. In summary, Microsoft is at a major crossroads both fundamentally and technically. The key support levels to watch are $370, $364, and the major 52-week low at $344.79. On the upside, resistance is heavy at $380, $385, and the psychological $400 mark. For an unbiased prediction, I believe we are likely to see a period of sideways consolidation between $365 and $380. I would give this sideways scenario a 60% probability as the market digests the recent news. There is a 30% chance of a further breakdown toward $350 if the FTC scrutiny intensifies. A bullish reversal back to $400 has only a 10% probability in the immediate short term without a huge catalyst. Conditions that would reinforce a bullish outlook include stabilized capex guidance or a favorable legal ruling. Watch for a double bottom formation on the hourly chart as your first sign to look for longs. The $625 billion backlog is the elephant in the room that could eventually drive Microsoft to BofA's $500 target. However, patience is required as the technical damage from early 2026 needs time to heal. Keep an eye on the broader Nasdaq index, as Microsoft often leads or follows the general tech sentiment. If the Magnificent Seven continues to underperform, Microsoft will have a hard time rallying alone. Always use stop losses and manage your risk, especially during these high volatility news cycles. Before you go, please remember that this analysis is for educational purposes only. This is not financial advice, and you should always do your own research before making investment decisions. The market is inherently risky, and past performance does not guarantee future results. Thank you for watching Explain the Charts, and we will see you in the next analysis. Stay disciplined. Watch the price action and trade what you see, not what you feel. Have a great trading day tomorrow.